Hello there, guys. What is going on? Pure trading. This is Monday. Usually, I don't do any videos on a Monday, but now the wife is sitting next to me. She's working, home office. I'm exhausted. It's one of the first times that I want to go to bed before she does. The first one on the list here is the Aussie dollar. Yesterday, I wanted to look at shorting this because of the we are risk off and we want to sell the Australian dollar. Looking at this on the daily, this was the level in question over here, this one here. Yeah, that's the first level. But notice now Friday it already comes up into that level. So what is our next level after that? The next level after that was this one here. And it really gets that one to the pip there. Then down to the 15-minute, and we can see that we don't have an RSI divergence here. Yeah, the reason is because we have highs and then we have a lower high here, so it's a failure to follow through. So you can see the RSI is high and there's a failure to follow through. So there's another way of getting in on this trades here, and I like using the Fibonacci for this one. So we take the high, pull it down to the immediate low here, and then pull it over. So this is not an entry, but based on a Fibonacci number here, 786, a lot of the guys would have traded this one going short there. But on the New Zealand dollar, there was a better opportunity for and justifying it with the 78.6. So doing exactly the same thing. We didn't really break through the level. This is our important level on the New Zealand dollar. It clips the level on Friday and then it goes higher. Now, on our 15-minute, remember we had this double top here I was talking about in the previous video. Let me just highlight that. That was the double top that I was looking at. And at that time, we had a RSI divergence and it comes in late on that Friday. And I said it would be a better opportunity to wait for manipulation of this double top. So for me, this is the manipulation on the top here. So it goes up quite a distance there, like let me see, about I think it is about 40 odd points there. So I'm not sure if a lot of people will be able to, place a trade going short and then waiting for a whole 50 points before actually entering the trade there. So that's the reason I said that I would like to see first the manipulation and then a setup. But then unfortunately here we don't have the RSI divergence either because we have this as a high and then that is a failure to follow through. So it fails to follow through here and the RSI does the same. Yeah, it makes its high there and then fails to follow through. So let's take that away. Pull out the Fibonacci again here. So we're taking the high to this low, and then look now, the 786 is just clipping it there. So for me, I like to see prices go through the 786 and then placing an order as prices comes back down. But this is the reason being short fundamentally and sentiment. It was quite easy to decide on, just going for the 78.6. Even here, even this one, just going short here with a very short, with a very small entry was also fine. But the thing is, on the daily, this is where we got our ideas from for both of the trades here, on for the New Zealand dollar and Australian dollar. Prices comes up beyond the mean there, and it's at a level. The Australian dollar, exactly the same sort of thing there. The levels are in question are this and this, and if it doesn't work there on that one, then we'll just try it again up here and up there. And the reason for going short is because of the risk off situation. And then if we look at the CAD here, the dollar versus the CAD, I'm just looking at all the commodity currencies. So for this one, Let me just show you quickly how I looked at this one. So we had prices already, last week, Friday, Thursday, Friday, all the way through. We are bullish on the dollar, buying the dollar at this extension beyond the mean there. Yeah. But the issue is, how do you get back in on a trades like this? So for me, it's jumping down to the 4 hourly and using Heikinashi instead of the normal candlesticks, and then using like a Spartan system here. So this is nice for trend trading. So you have a trend here, confirmed trend, prices comes down, up and down. So that's your Elliott wave trend. Trend breaks through the 4 hourly here and then retraces. Now the secret for me here is to always have to use the Fibonacci and get that 50% retracement before even looking at a continuation. Yeah. So if it didn't hit the 50% retracement, then this wouldn't have been a, a sort of setup for me. But then after this is just your point of interest. Yeah. Remember that this here is not your entry. Your entry is something else. So the way I'm entering on this trade is I'm using normal candlestick patterns here, and then using a 200 moving average for a to confirm a trend, and then waiting for a crossover of a MACD. So this is your entries here, but not before you've already done your homework and looked at your situation that you have here on the Heikinashi. So there's a few things that needs to be looked at first before pulling the trigger. Okay, thanks a lot for watching, and I'll see you in the next one. Don't forget to trade safely and prosper.